informal talk about it.
Mm-hmm.
Awesome work.
Hey guys. Hey. Looks like we're live.
Oh, hello.
Okay, so
are we? Hassan will tell us,
we're
right?
live.
Oh, we're live. Okay.
We're live. Okay, so here we are. We're on Interchain FM. Welcome everybody and happy holidays, cosmonauts. We have a very special episode today. We are here at the Interchain Unconference. We are closing it out, and we have a full hour to just go deep into the weeds of how MEV applies to the proof-of-stake context, and in particular, how it affects BFT proof-of-stake protocols, such as Tendermint and Libra and Hot Stuff, because those are the prominent ones out there. And so, yeah, we'll talk about threshold decryption as a solution, because that is what Sikka here with Dev and Sunny are working on. And we'll talk about all the different solutions that are being proposed out there and why a lot of them won't work. So yeah, maybe you guys will give your little intros. I want to tack on a little context about Dev as well, but yeah, please give your intros, Sunny and Dev.
I'll start. Yeah, hey guys, my name is Sunny. I think this is like probably your third time seeing me today, so hopefully you know who I am by now. But yeah, one of the co-founders of Sikka. Did a lot of work on the Cosmos SDK and Cosmos Hub and whatnot, and continuing to just keep improving the Cosmos stack.
Hey, I'm Dave, also co-founder of Sikka with Sunny. Yeah, worked at AIB 2 years ago, I run this validator. And when I was at AIB, I worked on, a lot of protocol things, in SDK and Tendermint. Now, I'm doing work on Sikka on threshold decryption and recursive snark research stuff.
Yeah, just to give our audience a little bit context about Dev, because I'm sure some of you know him very well, but not all of you. And the context with Dev is that he is, well, you were a protege of Alessandro Chiessa's, right? And you guys had, sorry, am I supposed to talk about your research in Snarks? Or is that
if you want to, I mean, I don't.
Okay, so the context about Dev is that he is Chiessa's protege, which Chiesa is like the CTO of Starkware, whose work is the foundational element of like all of the ZK snarks and rollups and optimism solutions is built upon. And so with Dev's work, a lot of it has lends itself to what they're doing in Cosmos. Yeah, and so that's a little bit of the context. I think he did himself a disfavor introducing himself so modestly. So
thanks, appreciate it.
Okay, so let's get into the topic. We wanted to talk about MEV. I know we kind of have had at least 3 different talks about MEV or minor extractable value, but this is an important topic, and this is exactly the thing that is sort of plaguing Ethereum today. And whenever any PoS network is going to gain on-chain exchange traction, they will run into the same sort of issues. And so we have to talk about it now, because in 2021, a lot of on-chain exchanges are going to be entering into the Cosmos space. So let's talk about it. And for this to be kind of a standalone podcast, because this is what it is, maybe one of you guys could just give a high-level synopsis about what minor extractable value is very quickly.
Yeah, sure. So how we think about minor extractable value is we basically think about it as the total amount of profit and value that the proposer of a block can extract due to certain additional powers that they have in their role as a proposer of that block. And so, this would not include things like 51% attacks or double spends or things like this, because this would require some quorum of all nodes to, or some quorum of often 33% or 51% or 67% to pull off this attack. An MEV is the amount of value that can be extracted from an attack that can be pulled off by a single proposer. And there's many different types of attacks you can do with this. There's time jacking, there's like selfish mining, but we're really focused on the ones that can be done three specific powers that a proposer has, which is the ability to read all transactions in the mempool, the ability to order, to choose which transactions get included in their block proposal, and then the ability to order, decide what order they show up in. And using these three powers, you can basically get like two big classes of attacks, which we'll define as like censorship attacks and then ordering attacks. So censorship attacks are where, like, miners want to censor someone from being able to make transactions on the block. This is something that they can do, and like, you don't, oftentimes in like some protocols you don't need a majority of hash power to do it. You could do it with a smaller percentage, such as like there's an attack called feather forking, which allows you to do this. And then the other is ordering attacks. And this is what people traditionally think of as front running, where you're able to, like, insert your transaction in front of someone else's transaction, or maybe you want to insert your transaction behind someone else's transaction. This is called back running. Or, there's also something called a dark forest attack, which is there's some on-chain puzzle of some sort, and I use the word puzzle pretty loosely. It could be like some arbitrage opportunity or something that can be exploited, and someone else does the work to figure out how to solve the puzzle. But because you can just read their transaction, you can just copy their solution and insert your transaction before them. And so this is sort of when we're talking about MEV, we're talking about, I guess, a subset of MEV, but specifically the ones that can be created using those three powers.
And those three powers,
and that's what we're really focusing on, minimizing. And like this.
Those three powers are powers present in every blockchain with every miner and validator.
And every blockchain today, yes.
Buffered for a second.
Do you think it's possible to generalize elegantly over these three? Something like the proposer has an informational and game theoretic advantage over people submitting to transactions in the mempool or something like this? I feel like it ought to be generalizable.
Yeah, it's kind of like they're having sort of transaction data power. Like, our way we think of it is like, you get other metadata about the transaction other than the fact that it's a transaction. Sort of like the minimal amount of data you could have is a blob of bytes and a fee that says it's good enough. And basically the attack lies in the fact that you have more information than that. Well, two things. One is you have more information than that. The second is that you get to also prioritize your own data.
Right.
I think there's definitely some sort of like isomorphism between like ordering and censorship, and inclusion, because if you're so this is like in our talk from yesterday, we defined like absolute absolute ordering versus relative ordering. Relative ordering is like when you're saying, hey, I want to be the transaction right before this other transaction, or I want to be the one right behind it. Right. But absolute front running is like, I don't care where, I just care about being the first transaction in a block, or maybe the last transaction in a block. And so, one way of guaranteeing that you're the first transaction in a block is just censor all other transactions in a block. And so you can use censorship to give yourself the ability to do certain sort of absolute ordering attacks.
Right. I mean, it seems to me like a way to generalize what we want to do here is to reduce or ideally even eliminate the game theoretic advantage of the proposer relative to everyone else submitting transactions. Because the proposer can submit transactions into their own blocks and control the order. Everyone else can submit transactions into the mempool, and the proposer can pick from the joint set of their potential transactions and the transactions in the mempool. And we just want to like eliminate their advantage.
Exactly.
Something like that. Yeah.
Mm-hmm.
How is this present in Tendermint? If in Tendermint, there's no sort of ordering logic and preference for transaction fees per se by the validator. It's sort of up in the air. Like how does a validator running Tendermint exploit this?
Okay, so I think the point you're making is about the current mempool logic. So it's the case that at the moment, all Tendermint mempools, if you're an honest validator, you're not honest, wrong word. If you're a validator who just runs the code that is in github.com/tendermint. What you do is you basically propose transactions in the order you receive them, or as long as like they're valid and they have a minimum fee. But if you were a profit-seeking validator or who like is willing to edit some code, you just add some sort of sorting logic to say, I'm gonna make my mempool choose the most profitable transactions by fees and propose those. And but this is a mempool level thing. So MEV is basically being malicious at that mempool level, or a lot of the MEV is being malicious at that mempool level, where you write an adversarial mempool. Like you go one step further beyond just choosing the highest fees like other chains, and you want to ignore other people's transactions maliciously or do these other attacks. So this is like at the proposer level, and you have to mitigate this by you mitigate this either via on-chain mechanisms or in consensus mechanisms.
Okay. Well, let's talk about how.
Sorry, really quick. A part of the problem I think is right now I don't think there's enough MEV, like extractable value right now on any Tendermint-based chain to actually make it worth it for anyone to have gone and modified their code base. But there clearly is enough on Ethereum, which is why there are miners that have gone and modified the normal, the default Geth client to do that. And as we see Cosmos-based chains that gain more and more economic activity, it's inevitable that we'll see validators start to do this.
Especially as you start putting decentralized exchanges on the hub itself, then those opportunities start to grow and grow.
Absolutely.
Yeah.
Okay.
So I think on the hub right now, it's not clear to me if there's anything you can do in payments or beyond like pricing censorship, or if there's anything you can do on staking or governance other than pricing censorship. But on the DEXs is when we start introducing lots of capabilities.
Yeah, I mean one thing you could say that maybe would be a type of MEV you could do on the hub right now is currently in protocol it's expected that fees are split evenly amongst all validators, right? Or roughly evenly with some special bonus going to the proposer. But because of the miner's ability to select control inclusion the proposer ability to control inclusion in the block, they could basically side channel expect payment before including transactions in the block, so that way the side channel fee doesn't have to be split with all the rest of the validators. And so that would be a form of MEV that could be extracted on the Cosmos hub today.
Yep.
Okay. Let's talk about the different solutions in the ether right now that attempt to mitigate the risks of MEV. Does anyone have a list? We can start with EIP 1559.
Yeah, Dave, you want to talk about EIP 1559?
Sure. Okay, so EIP 1559 is like a really cool idea of making a consensus minimum fee. So I guess there's maybe two ways to frame it. The one that was really popular maybe 2 years ago, and is that essentially, suppose you wanted to add a lot of transactions to a blockchain, to Ethereum or Bitcoin or even the hub. What should you be setting your transaction fee as? It's really unclear. Because as a wallet, you don't have insight into what is the rest of the network doing, and so you don't know what the live fees are, what miners are accepting. And it got to the point where even people who were doing some attacks on contracts to exploit bugs would actually go to a centralized service to go tell it what the fees are, because they couldn't figure it out. So the goal of EIP 1559 is let's have a minimum fee in consensus that's basically going to tell it's going to say all transactions to be included in the chain must have a fee of at least 1.1 ETH or something. And then this is going to adapt based on live network conditions. Because what is the purpose of fees? It's essentially to control the amount of things in a block. Or because the block is limited space, it's to price what gets to go in, because you want to prevent spam attacks. So the way EIP 1559 works is that we say, okay, I want a block to on average be 50% full. If we're being 80% full for too long, that means our fee, our minimum fee is actually too low. we need to raise the price up so that we get back to equilibrium. And so now this lets everyone know, like, okay, if I want to get a transaction into the block, I should pay the minimum fee plus epsilon.
So it's like a P controller on minimum fees.
Yeah, exactly.
Without the I or the D, just P. They consider I or D?
Okay, sorry.
Might be crazy.
What is the P? What equation are you talking about?
There's from control theory, which deals with how to adjust inputs to target outputs. For example, your thermostat probably has something like a PID controller or a PI controller, which uses the proportional error, so the target temperature versus the measured temperature, the integral of the error, so the area under the curve, and potentially some term related to the derivative, how fast the error is changing, to determine how to adjust the input, which is like the electricity going to heating vents or whatever.
There's another piece of EIP 1559, which is, what's to stop the proposers from just, spamming the network to push up the minimum fee. Well, currently, currently on Ethereum, like miners get all the transaction fees, and so they can do this easily. That's why to do that, they have to implement fee burning, where the minimum fee is then burned. So that way, there's a cost to miners doing this. And then what all the Ethereum people get excited about is, we're going to reduce the supply of ETH now because we're burning fees. But that was really actually a side effect of like the mechanism designed for this like gas auctions stuff. But but back to the original point though, in no way is this really isn't even really a solution to MEV. It doesn't like do anything to mitigate any of the powers that the proposer has, and it doesn't actually solve any of the attacks that we mentioned.
So why don't we talk about how threshold decryption solves that?
Wait. Okay, no. Let's start somewhere else. So I'm a lazy programmer. Sorry, Chjango. I think this will make more sense. I'm a lazy programmer, and I want to prevent minor extractable value. So what about, I'm going to do something that sounds like a good solution. I'm going to require that everyone publish commitments to their transactions. So if I want to submit a transaction to the blockchain, I have to first publish the hash of it. And then that hash will get ordered. The proposer will commit to an ordering of the hashes, assuming they can't brute force the pre-image space. They won't be able to find what my transaction was. Then I'll send my transaction. It will get checked against the hash and it will get executed. Seems easy. I don't need any fancy crypto. Can I do that? Or something?
Well, this has gotten, I don't know, a lot of people have gotten really into the meme of this, like hash commitments, but it doesn't actually solve so there's maybe two ways of thinking about this. Way one is exactly what you described. I publish the commitment of my transaction on chain, and then some point later, my actual transaction gets included. The second one I'm thinking about is maybe you require, so if you do that, we didn't solve any ordering attacks, because I've committed that this should eventually appear on chain. But what if I as a miner just never publish your opening? And you actually can't require the miner to publish the opening, because the problem then is I need a proof that you sent me the opening, but I fundamentally can't prove that you've already given me the opening so that I can one day later publish it. Because in order to prove that, I'd have to actually just give you the data without any cryptography tricks. If I gave you the data, I've seen your data, so then I can front run. So does that make sense? Like you either have to give me the data along with the hash, and so then I can include it on chain, or you take the risk that your opening is never included on chain, or your opening is front ran.
All right. So what are the other approaches to solving this?
There's another common, I would say, solution that's proposed, which is batch execution. And batch execution is, what's nice is I think batch execution solves it's like a medium-ish solution for very specific situations. So it's really good for trading systems where when you're having any sort of trading system, if you can, it's profitable to front run someone else's transaction. So you buy some tokens, then you let them buy tokens, which pushes up the price, and then you sell the tokens right after them. And batch execution makes it so like, okay, all the buys in a block and all the sells in a block get executed at the same price. So you can't make a profit off of that. I mean, the problem is you could do like front running across blocks. So because you can see a big buy, like someone trying to buy $1 million of a token, what you can just do is buy now in this block, censor their transaction for one block, and so then when theirs goes in the next batch, then you guys are still getting a better pricing. So that's why batch execution.
Yeah, you can try transaction to validity specific block numbers, but that sounds terrible.
Right. And then, and so even if the transaction fails, that person has already signaled, has already revealed intent to buy $1 million of that token. So if their transaction didn't get it, are they going to not buy the $1 million now?
So you can essentially move any sort of prior MEV attack you had, where you do things with the shenanigans in the block, to now you just do shenanigans across blocks.
I want to talk about Polkadot's approach to MEV. I know we had a little side chat about it, but maybe let's talk about this publicly because that was a revealing conversation.
Could you tell us a bit more about what their approach is?
Oh, I'm not sure which thing it is at the moment.
Oh,
this is a recent.
I don't know what you're talking about, but I'm happy to talk about it. You want to introduce it?
Okay, sorry. Yeah, if we don't have enough context with that, because that was recently launched.
Oh, okay. I think I found it. They basically. Okay, so by the way, this isn't the Polkadot core team. This is like one project building like one thing, like using Substrate, one parachain or something. And so they basically say, one, we don't do network fees, and this prevents people from paying higher transactions to like front run other people. So once again, like, that's not one, that's assuming a lot of honesty on behalf of the proposer, and also, that's just assuming way too much honesty on the behalf of the proposer. The proposer can still choose an order. It's just basically the same thing as what we said. Like, Tendermint today, if you just run the source code, then yes, but people wouldn't if there's any significant value. And then the other thing that they say is the miner can't front run users because the transaction execution order is randomized by a new blocks hash from the subsequent miner. And so what this is kind of nice, because what this does is it helps reduce. So those three powers that we talked about, the ability to read, include, and order, it does help reduce the ability of one miner to order the transactions in the block. It basically, it separates the miner that gets, or the proposer that gets to include transactions from the one that gets to order them. That doesn't mean that we're actually like, because, if the block hash, the next proposer can probably do some sort of stake grinding to like modify the block hash to be what they want it to do. So yes, it does make ordering a little bit harder, but it doesn't solve any of the other two problems.
Yeah, I might be working on a bit more detail on that because I think it's kind of interesting. So let's first suppose that there's like no collusion between this block proposer and the next block proposer. What's happening is block proposer for block n chooses some order, but then the block proposer for block n+1 picks another block, and they essentially get to choose the order of block n. Like we're saying that it's randomized, but in practice, that this kind of means that you can choose any sort of relative ordering pair you wanted. Like the next block proposer is the one getting to choose the order of the prior block. So if there's no collusion between two miners, then this doesn't let the next block proposer do that much. But once you start. But they still can, make transactions as sort of an honest user and always get some transaction of block n, or get some probability to get transactions block n, and then reorder to get profit.
Also, the next proposer can, because mempools are usually like publicly visible right now, they can see they have the ability to read transactions, submit transactions to the previous proposer, so their transactions in a block, and then be able to mess with the ordering so they can do like even normal front running attacks.
Okay, cool. Have we covered the entire range of possible solutions out there, or are there others that we want?
What about time lock encryption?
Oh yeah, this is actually pretty interesting. So I guess, do you want to give a summary of it, Chris? Or
Go ahead.
Okay. Well, time lock crypto is this thing where I can encrypt a message M and say that, okay, it takes now T sequential time steps for someone else to decrypt it. So this means that if you have some ASIC for decrypting, you know that it will always take time T to decrypt a message, assuming on the ASIC type. You can't buy multiple ASICs to make it go faster. Now, this is different than proof of work, where in proof of work, if you buy 2 ASICs, you find the block twice as fast. So the whole point of this is that it's not parallelizable. So you could use this where I can basically time lock encrypt my message, wait for it to get on chain and be finalized. Then, since anyone can compute the decryption, we require nodes to, or a block proposer. I don't know, say T blocks from now, assuming block time matches our time unit perfectly, to include the decryption. So the way the system would work then is if a transaction is included in block N, that's time lock encrypted, then you wait T blocks in the future, and so the transaction is finalized. Then the proposer at that time has to submit the decryption. So they start the decryption as soon as the transaction gets into a block.
It's basically the solution to the problem in the hash commit solution that you mentioned earlier.
Yep.
The hash, yeah.
Because you can guarantee
Now,
openings providable. But there's actually two problems. I don't know. One may not be so subtle. One is kind of subtle. The one that's not so subtle is how do you set this time parameter? Because this is kind of key. So first idea, you set it to just be the minimum time for finalization that you're happy enough with. So in proof of work, I don't know, you say 10 Bitcoin blocks. Okay, well, you set it to that. So then you're guaranteed that you can only get it executed once you think it's finalized enough. But that's actually not all of it, because that assumes that an attacker only starts mining, or decrypting, once your transaction is in a block. But actually, they start decrypting the second they see your transaction. So in the mempool, when I see your transaction, I begin my decryption process. So we have to allow for the minimum mempool wait time. And, these can be, this will depend on network conditions, but you have two options. Either you set something in protocol or you let it be variable. You may have it vary under EIP 159 type semantics, or people oracling in data about what is the live mempool conditions, or you could have it be static or variable, like as a pure variable. Maybe let's walk through each of these. So actually, maybe instead of going through that way, let me explain the other problem, which will then subvert the explanation of two solutions don't work. The second problem is basically we require the transaction to be included in T blocks from now, the decryption. But you have this problem where what if I can also submit non-encrypted transactions? T blocks of delay, that's annoying. I want to execute a transaction, get executed now. Well, the problem you run into is then if I start decrypting while it's in the mempool, and I see your decryption before time T has come, then I'll submit, I can submit my own transaction based off what yours is going to decrypt to. And so then, since I saw your transaction data, I can now front run it because I can be before it. So I submit my plain text transaction and it gets executed, and now I've profited once yours is finally decrypted later. So to combat that, you actually need all transactions in the network to be time lock encrypted. And time lock encrypted with the same delay. Why? Because you need all transactions to have the same delay between submission and execution. They don't need to be time lock encrypted. But this means that if I decrypt your transaction, one block cover is committed, because I've started in the mempool, then I can't submit another transaction before it happens. So then, therefore, your transaction is safe, not front runnable.
So this is like a really bad UX.
Yeah, because this means that all transactions have to pay a delay. But okay, maybe this isn't so bad at the moment, because it's a delay. Well, we already pay a delay. Bitcoin, you're around 10 minutes, or actually, it costs us around 5 seconds. But let me justify why the delays actually has to be a bit bad. It has to be at least average mempool wait time, which, okay, I don't know, depends on your network, what the conditions are. I don't have data for what it is on ETH right now. But then you also have to factor in consensus or actual risk in your cryptography. at the moment, threshold cryptos, what do you say, very novel. Like things are kind of based off of similar constructions to VDFs. VDFs have only really popped up as a thing in the last 3 or 4 years. And even then, it's like we're only starting to deploy them now-ish. Like as far as I'm aware, ETH2 is going to be the first thing to deploy it, or maybe Chia.
But threshold.
Right,
sorry.
Go ahead.
I just found it interesting that you brought up VDFs. Like threshold decryption is different from that, in that it's like not contingent upon hardware, is it?
Correct.
Time lock crypto is similar to VDFs.
Oh, I'm sorry. Yeah, time lock is. Threshold has no hardware assumptions. Time lock does.
Well, and in particular, you have this like non-falsifiable assumption that there doesn't exist an ASIC faster than some factor relative to the time that you're expecting it to take to compute the function.
Exactly. And you have to pick that factor ahead of time for what's the maximum risk you're willing to take, and then scale your delay by that much.
Yeah, I actually talked to some ASIC designers. I talked to some ASIC designers earlier this summer. I think the people who are working on the ETH2 ASICs asked this question because it's like the thing you can get a kind of expert sense on, but you can't falsify. And they said, what was it? They said that it would be not that surprising if there was an ASIC that was an order of magnitude faster, but it would be pretty surprising if there was one that was 2 orders of magnitude faster. Wow. That's a pretty terrible bound.
We can allow 100x is okay. 10x is maybe a shaky assumption.
Right. That was what they thought.
Whoa, it's kind of crazy.
Yeah.
Okay,
this
have
is
we?
Supranational, and I don't want to quote them as an official thing.
Yeah.
It was just like an ad hoc question.
Have we exhausted all the different solutions to MEV so far?
There's one other than which is another form of doing privacy in the mempool, which is the SGX, or some sort of trusted hardware, and it's basically just black magic. And if you trust the SGX that it's not broken, then you send encrypted. So each SGX has a private key in it. You can encrypt transactions to the private key in there, such that they're only decryptable in the SGX, and you can build this into your system. Obviously, there's like some levels of like trust in the Intel key management system, but that's fine. Maybe we can resolve that through better like processes around trusted hardware. But there's also just this problem of like how hard is it to break the security of one of these trusted enclaves and leak and get the private key out of there. And we see bugs, and we see new research teams like finding bugs in the SGX like every couple of months. And so it seems to be that currently the cost to break a single SGX is not that high, and once you can break a single SGX, you kind of break the security of the privacy of all transactions in the system. And so the cost is essentially, I think the cost to break a single SGX is probably going to be less than what the cost to like develop a ASIC that's like a magnitude better.
And also, you need the cost of an SGX to be less than the MEV profitability of a miner. Otherwise, then you'd assume, with some delays, of course, that the miners are just going to break the ASIC SGX because they're going to profit. And I don't have actual numbers for what it's cost to break an SGX, but just given the rate of SGX breaks and the number of people, great security researchers on each paper, I'd guess it's in under 10 million to fund a team to break an SGX, whereas MEV on Ethereum is over 20 million, I believe. That's a figure I saw from Flashbots, I think.
Per X, or an integral over some time period?
I think it was integral over. I don't know. So
I don't remember what the exact number was.
Okay.
So this data was done by a couple of our friends. So Phil Dyan, who was the original creator of the MEV paper, along with a bunch of other friends. They are working on a company called Flashbots, which is actually building a MEV auction system at layer 1 on Ethereum. So it's basically allowing so currently. When arbitrage, people who are trying to front run and on Ethereum send transactions to miners, they might be worried that the miners might try to front run, but just dark forest them, copy their transaction and run it themselves. And so they're basically using an SGX to do a private auction system where people who are trying to exploit MEV can send transactions to miners, and the miners can efficiently choose it and like provide some guarantees to the people who are trying. Basically, a bribery market for miners.
In parallel, the thing that got this figure was that they also they're building tooling to try to estimate what is MEV available and also how much is extracted.
Yeah, they've done a lot of really good work to like actually measure like off of real Ethereum data over like the last year how much like the dollar value of MEV that's been extracted. Both extracted and would have been extractable had people been optimized at it. Like if we know what we know today and they've been using it from a year ago.
Wouldn't you consider that in itself an attempt to mitigate MEV by sort of playing by the playing the game, so to speak, instead of trying to mitigate any exposure?
It doesn't minimize MEV. What it does is it might help reduce some of the problems that are caused by high MEV. So when you have high MEV, it can cause certain undesirable side effects. One of them is consensus instability, which is the idea that like, as the MEV increases, if the MEV in a block is too high, it might be worth it for miners to not build on top of it, but rather try to reorg that to like, try to keep mining on the previous block. So they're the ones who get to extract the MEV. Another one is gas price, just gas craziness, where because what's happening right now is you have all these like third parties who are like trying to extract MEV and like playing this gas price game right now to try to front run everyone else. This like that's a big part of what caused the gas congestion on Ethereum this summer. And so their solution definitely helps solve that problem, but it doesn't actually reduce MEV itself. The amount of extractable value is the same. It just helps mitigate some of those side effects.
Yeah, and so for the first type of attack, you call that a time jacking attack, or is that what Phil Diane refers to as a time bandit attack, where you want to?
That's the time bandit attack. Yeah, the time bandit, and it's like it's not specific to MEV. It occurs even in a system where if the transaction fees of a blockchain start to exceed the block reward, this becomes a problem because it might not be worth. If the transaction fees of a particular block are extremely high, then it's worth it for you to not build on that block, but rather try to be the miner to mine that block. And so high MEV is basically of a specific block is basically like a type of transaction fee, essentially, when you're thinking about it like that. And so that just helps. And once the transaction fees get up well above the block reward, then you get into weird consensus instability.
Mm-hmm. And
yeah, so Phil calls that a time bandit attack when you try to exploit that.
Yeah, so that's more of an issue with chains that are running Nakamoto consensus. But what about for Tendermint chains, for example, that don't fork, for example?
So consensus instability in Nakamoto chains takes the form of like safety failures, where it's like validator miners would like keep trying to fork and try to be the winner there. In BFT chains, the consensus instability takes the form of liveness failures, where I want to be the proposer of this particular block, and so I'm just going to censor the proposer, at round 0 and go to the next Tendermint round so I can be the one to propose it.
But it doesn't feel like it's going to be a Schelling point that works, right? Like I suppose every one validator, after some initial period, is going to understand what's going on here. So then, suppose you're always censoring me as a proposer. So you attempt to propose every single block, you censor every like you can say it applies even now, right? That as a validator, I should be censoring every other person's vote except my own. So therefore, I always propose to get that proposer cut.
Right, but then the problem is like, how do you solve it? I mean, one of the things we did in the Cosmos SDK was split all transaction fees across all validators as a form of mitigation of this.
Mostly.
Mostly.
We lower the delta of like what is the advantage you get by proposing a thing.
Right.
But like I'm unconvinced that this is like actually so that's important. Like that's you go from 100% to what 5% delta, 20x improvement in profit. But even if even if the profitability of you being the proposer was insane, I'm not convinced how the Schelling point of this is going to work, because in these fast finality chains, you need 66% of people to agree who gets proposed this really profitable thing. And so at least, so you could engineer a thing where, okay, either everyone, so I think it's maybe 2 or 2 or 3 natural points ends up on then. Point 1 is that everyone just lets the first proposer propose it, because otherwise they run into the other 2 situations. Second situation, all proposers keep on everyone just fails to vote at someone else's block until it's their turn. Since everyone does this, it never gets proposed.
Yes, but there's also a countervailing incentive if you don't know what strategy everyone else is playing, because if your vote doesn't get included, you get less fees. And eventually you could get slashed.
There's also like, this also, what Dave's saying is kind of nice that we actually have a deterministic like order of proposers. So like if round 0 fails, then we know who the proposer at round 1 is. Then we know who the proposer at round 2 is. Because if you're not the, that like riddle about like the pirates splitting the treasure and they're like ranked in hierarchy and stuff. I feel like it turns into like one of those things where if you're not the proposer of round 2, you don't think it's worth censoring the person at round 0 because you don't think it's going to come to you or something like that. I feel like, I don't remember the puzzle exactly, but I feel there's like something there similar. But if it was completely random, if you had like a equal chance of becoming the proposer at the next round, I think the incentives are different.
Actually, my favorite like methods of proposer randomization are you still have deterministic election across rounds, but it's random for what happens in round 1 or what happened in this round. How this round affects this proposer, this block affects the proposer of the next block.
Correct. So within one block, the multiple rounds, the order of proposals should be known, but not between. Like you shouldn't know who it's going to be for the what that list is going to be for the next block.
Well, it's still not clear how the incentives work out there. Like these are 2 different ways of doing proposer randomization. I think both are interesting. But even if I think there's also protocol level things we can do, because we can say that okay, if we're getting this tail case of we've incremented rounds a lot, we're failing to come to consensus because of this profit opportunity. We can have the profit opportunity decay every time a round's incremented. And in fact, we actually do this in Cosmos, if I understand correctly. Like, don't we have some decay factor for in round N, some...
We were supposed to. It was in my spec, but we never got it.
Oh, really?
There's also a very long GitHub issue, which I am going to push here because no one has ever implemented it. That, like, does some analysis to drive what fees our proof-of-stake system ought to be paying. And it's like twice as complex as the actual fees that we're actually paying. But has some advantages.
What's the name of that spec that you're talking about?
It's the one Chris is talking about.
Sunny and I probably wrote separate specs. We should like fuse them.
They're not specs. They're just like GitHub issues that I just like wrote comments on. Yeah.
Okay. So great. Now we know all of the pitfalls of approaches to mitigating MEV. Let's talk about threshold decryption because we really only have 15 minutes left. We've like ran pretty long.
Cool. So threshold decryption essentially is, it's a form of threshold cryptography, but unlike threshold signatures, which people might be familiar with, like, you could design a scheme where like any 2/3 of this set can like generate this signature. Here we have any 2/3 of these 100 nodes can like decrypt the same message. And so what you could do is all transactions that are submitted to the mempool will be encrypted to that shared decryption key. And then once a block is committed, then the validators can work together to decrypt them. And the obvious threshold to use is 2/3. And how we're proposing architecting it is that using so we've designed a lot of changes to ABCI that we've been calling ABCI++. And so we propose, so one of those that we did was it's something called vote extensions. And basically what we say is that you include your decryption share along with the pre-commit on a block. And that way, once a validator has 2/3 of the pre-commits, they have 2/3 of the decryption shares, and you can start decrypting the transactions. And so that means you can't decrypt the shares without having committed the block. But at the same time, you can't once you have 2/3 pre-commits, based off of the Tendermint locking conditions, that means that inevitably that block will be committed. And so it is safe to start decrypting them. So basically decryption and consensus, like by definition, have to go in lockstep with each other. And so this is nice because unlike time lock encryption, there's like no scenario here where like you should be able to decrypt before the block is committed, except for if there are colluding validators, which Dave can talk about the fraud proofs here.
Oh, sure. Okay, so step back. What's happening is, okay, what do I want? I want my transaction to be encrypted until it is finalized. Then once it's finalized, I want it to be decrypted and executed immediately. So what I'm going to do is, if I want fraud proofs, the way I engineer this is, I'm going to have my transaction included in block N. And so like block N is done, it is finalized now. So now when the proposers are going to build block N plus 1, they're going, like after block N's been finalized, they're going to work on, they're going to, as Sonny mentioned earlier, like they're going to be required to provide decryption shares. And so when block N plus 1 is published, it is required then that all transactions in block N are decryptable. So now the question is, if we have 2/3 of validators who are colluding, how do we know they're not going to decrypt before they include a transaction in a block? Know the plain text first and then front run. So the trick is the same thing we actually do for consensus itself. So let's take a step, like, how do we know blockchain consensus or Tendermint consensus is secure if 2/3 of validators are colluding and they want to basically fork? Well, what we do is we give every member of this 2/3 cabal the ability to like report another member. So this is like a double sign proof. So we all 2/3 have to agree to do this attack, but any one person can split off and just report everyone else to get their money burnt. So we're going to do the same thing for threshold decryption. We're going to say that if you give me a threshold decryption share using the key, your key from consensus or a related key, then I can I'll report this to the chain and you'll get slashed. Like for any transaction that's not been finalized yet. So this means that the fear is that it's your transactions in the mempool, not in a block, and then it gets this attack happens. So now I can take your transaction, like your decryption share, and report it on chain. And since this transaction is not finalized yet, you then get slashed.
So now using this, we basically do get the same economic security guarantees for decryption as we do for consensus, which is much better than both the SGX and time lock crypto solutions that were previously discussed.
I do want to add an asterisk here. There's not security proofs here yet. So it is, nor were there in the underlying consensus case. So maybe there's like clever things you could do where I could give a threshold decryption share that doesn't look like threshold decryption share. Just like, maybe I could do some clever things where I could, actually, which is different than consensus. I don't know, maybe this is subtle. Should I go into this in more detail? Or okay, so in consensus, in order to convince another client, I have to provide sort of my raw signature, right? Like my signature on a second block, let's say N prime. So like I finalize block N, that's a normal thing everyone knows about. I have to vote on N block N prime, and then this is something that anyone can see. Like every client has to see the signature N prime, and therefore they can make this fraud proof. And therefore everyone on the cabal can make this like double sign proof. But in the threshold decryption case, what I need is like some data that can be aggregated together or to do a fraud proof. So like you don't have a honest client who adds a restriction on you. It's like, what if you do a threshold decryption share in an SGX? So only SGXs can see your malicious share. And if you assume the SGXs are secure, then no one can see it. So it's actually like, we can solve this sort of main layer attack. Then you're left to like SGX or maybe fancier FHE tricks or etc. Or okay, no. Basically, we solve it unless you want to go to SGXs as validators. But then you have the assumption that any other validator in the cabal who breaks an SGX can report you. So you're back to this economic thing.
And Phil Dian does have, so everything goes back to Phil, but he has this paper about like, how you can prove that you're not sending something to an SGX kind of thing.
Does it involve like calling a hash function a lot of times on everything?
Yeah, that's
Yeah.
like fake.
Yeah.
No, that's not a real solution.
Doesn't count.
No, because basically saying SGXs are really small. They can only do T units of computation. So if you do T plus 1, it's not on proof. It's not an SGX.
Yeah.
It's kind of ridiculous. No, I'm just gonna make a bigger SGX. Like if there's a
Yeah, but it changes the economic costs. I mean, if you're playing a game with economic costs, maybe it makes sense.
Okay, that's fair. That's fair. Maybe that's too much on the provabilities point. Like, you can prove it's not in the current instance of an SGX, but then you have to keep on adapting as SGX technology changes consensus.
Yeah.
Your fraud proof abilities.
All right, we only have 10 minutes left, so let's zoom out a little bit beyond consensus, zoom into the interchain construction. So what happens now with an IBC-enabled world where there's the Cosmos Hub and all of these different zones, some of them running DEXs, and there's MEV. So what then? What could we expect then? And imagine if they're all using threshold decryption at the consensus level, then to what extent is the entire ecosystem as a whole sort of buffered against the risks of like ecosystem-wide corruption?
So what's interesting is maybe you might want some levels of wrapped threshold encryption. So let's say you have a transaction that's meant to send an IBC packet to another chain, right? And so once so it's supposed to you have tokens on this chain and you're supposed to do like a cross-chain contract call to do a trade on the other chain. Well, once you send your transaction to the chain A, it gets decrypted and anyone can see it before the IBC packet gets relayed. And they can front run you by doing a transaction directly on chain B. So this is where you might want to do wrapped threshold encryption where the IBC packet is also threshold the data of the IBC packet is also threshold encrypted to the validator set or to the decryption key of the other chain. So these are sort of, I don't know, we haven't thought too much about it.
I actually think this is a really great question. Like I haven't thought about it before. It's really exciting. Like something kind of concerns me is interesting here is that if I'm chain A, I'm talking to chain B, the way IBC currently works, I can't assume chain B is doing threshold decryption. Like I can't reason my security off that very nicely because I have no guarantees that chain B's state is correct. All I assume on chain B is consensus happened properly, but nothing about state validity. And state validity is what tells you threshold decryption. So I actually in the IBC architecture can't get cross-chain threshold decryption guarantees like that well.
Well, but
as
you
far as
wouldn't
I'm aware.
No, but I don't see how it's different from. I mean, if you are as a user are sending packets from A through to B, even in some kind of multi-hop construction, you are accepting state machine fault risk. The chains are not, but you are, and it seems to me like that's pretty much the same as if you are doing wrapped threshold decryption.
Right. This is true. But I maybe I misunderstood the question. But I thought the question was going towards suppose we live in this world where you have no idea where your staking token is or derivatives of it are, and to what extent does MEV on another chain put your chain at risk? So sorry, maybe I
see.
Yeah, you're totally.
That is an interesting question.
And I think this goes back to the discussion you guys had with Tarun on a previous Interchain FM.
I want to bring up.
That was Interchain FM episode number 8. Tune into that one whenever you get the chance.
Could you also require, with an instruction in your transaction, that the validators? That probably doesn't work. I was going to say you could require that the validators of chain A, instead of publishing the decrypted version, encrypt it immediately to chain B. But if they're also validators of chain B, then they have it, so that doesn't work. Or they can sell it.
But anyone can view it. So to be clear, once the decryption shares are there, it's not like only the validators can see it and re-encrypt it. Once the decryption shares are there, everyone can see that. So anyone who's watching,
right?
Oh, that's better playing games threshold, right? what I could do is I could require validators to give, suppose you need T shares to decrypt. I can give T-1 on chain, and any other validator can then decrypt. And by playing games with how I choose shares correctly, we can get this property.
No, but then any of those T-1 can't.
No, you play games where you say that actually every validator has 2 shares.
Oh my God! Yeah, okay.
No, this is like how you do it. Like.
Yeah, you're right. Yeah.
So the other thing I would note is that it should be possible to get similar guarantees in cases of validator overlap as we get in cross-chain validation for mutual, let's just call it mutual or chained threshold decryption. If you have, if you're making correctness assumptions or even rationality assumptions about, at least 2/3 of validators or whatever, and then you have some overlap between 2 chains, you should be able to get similar guarantees. Like if you have over 2/3 overlap, that means you have at least 1/3 honest, which means that if your threshold decryption requires 2/3, then you're fine.
Oh, that is quite cool. Yeah, wow.
Something like this. I haven't reasoned through this at all, just spur of the moment, but it seems like it's basically the same security model.
Yeah, we can always increase the threshold decryption bound, right? Like we can go from 2/3 to 7/8 if you want, get different.
Right. I mean, you trade liveness, but
yeah. Well, we don't need. Yeah, I guess we trade liveness, but also like empirically on the hub, I think we've had some nice data where we don't really get. If you have uncorrelated liveness faults, maybe that's okay.
Right. Well, I mean, you could do this for consensus too. In consensus, this is like what flexible BFT does.
Yes.
And if you change the base requirement to more than 2/3, then you get better cross-chain validation guarantees with less overlap.
Mm-hmm.
So, like a lot of points in the trade-off space.
Do you think that's a question I'd like to ask? Do you think that's something that's going to happen? Like, should we be considering like raising the liveness bound from 2/3?
I think it is dependent on an economic calculations of like what are the costs of liveness faults versus what benefit do we get for IBC security, which is substantial. So it's not like I don't think you could derive it a priori. I think it's based on what's actually happening. But
right, you can't really predict how shared security is going to play out.
That too. I mean, the complexity is, I don't know, compounding, which is terrifying.
Let's open this up for some Q&A from the audience if anybody wants to ask questions. So we have about 3 minutes left, but we don't have any questions right now. But if one did, you could ask questions.
Until some questions come in, I'd just like to talk a little bit about what we're like building in, like, we talked about all this theory. So one of like the interesting things about threshold encryption is it really only works well in some system where like you have many people contribute before a like block is like finalized, and like basically works well in classical BFT style systems, which is such as Tendermint, which is kind of annoying because it's hard to integrate into like an ETH 2.0's Casper system, but at the same time it's kind of nice because it's like more proof that Tendermint is the greatest thing ever. And so what we're working on right now is building a what we call ABCI middleware that sort of does threshold decryption, and so that way it talks to Tendermint core, but then it can work with any sort of ABCI app. So that would include things like the Cosmos SDK, but also things like, roll-up platforms. And because today, like almost all roll-ups on Ethereum are using these like centralized operators. And, the roll-ups, like whether they're using validity proofs or fraud proofs, it's like giving you like safety proofs, like, that like, you have validity of execution, but it's not giving you any sort of guarantees about liveness or like censorship / front running resistance. And so those you get by still having a decentralized validator set operating your chain. And so, that's where I think, having a Tendermint chain doing a roll up, now you get safety and liveness proofs. Now you add in a our threshold decryption solution, now you also get censorship resistance proofs. And so it'll be really interesting to see, like, hopefully, maybe this is a valuable feature that helps get Tendermint consensus like propagated and used throughout the ecosystem outside of just Cosmos.
Or, we say Tendermint, it works for, hot stuff or like
Right.
Celos, BF3, like these sort of classical BFTs.
Classical BFTs, yeah.
So is threshold decryption not applicable in Nakamoto consensus at all?
Not really, yeah.
So it's at least you can't tie it to your the same function you're doing for consensus cleanly.
Right. If you can't have it have the same security guarantees as consensus. You can have a separate process that's doing it.
Okay, so if we see ETH1 having to take the nuclear route, well, they know who to go to. Okay, great. So yeah, we are at time. Thank you everyone for being here, spending this time with us. Happy holidays, and thank you for tuning in. Thank you to the people who are listening to the podcast and the audio recording after the fact. This was a very great conversation, and we'll have a lot more of these in future Interchain FM talks. Bye.
Thanks all. Ciao.
It's fun. See you.